Crypto Alpha community, trust you're doing great. Yeah, so let's go straight to business. Yeah, so the purpose of this video is to show you how to trade futures, and not just show you how to trade, but how to set up your account, do all of the necessary setup you need to do to take a successful trade in futures trading, right? Now, so before I go into it, I would like to explain what futures trading is, right? So we have various types of trading and various avenue of trading. So you can either trade on the spot market, which is buying a particular coin, yes, and holding it, because you have the belief that the token is going to increase in certain amount of gains, right? So maybe you buy a token at $1, you're expecting it to go to $2. That's why you're buying it, expecting it to go to $2, so you can sell when it gets to that price. Right? So that's spot trading. So you own the token in spot trading. But when it comes to futures trading, you're trading with leverage, you're trading with a borrowed capital. Now let's say for example you have $100, just like is indicated on your screen in this Bybit account. So for this tutorial I'm using Bybit account. So $100 it's your capital, right? But you want to trade with more than $100, but you don't have the capacity, and that's where futures trading comes in. It gives you more than you can afford to trade with, right? And with this comes with both the risks and its reward, right? So there's always a downside to every benefit. So it has its own disadvantage and disadvantage. We are going to be discussing all of that in this video. So now for futures trading, you don't own the particular token. You are trading a particular contract, right? Just like a contract of agreement, when all the terms are met, so and so happens, right? So yeah, so when it comes to your Bybit or any exchange you'll be using for trading, so you can either use Bybit, Mex, Binance, whatever exchange you choose to use. Now, the coin you are trading will determine the exchange to use. Some exchange might not have a particular token you want to trade, so you need to switch to that exchange to use them. So now let's assume for this trade you are using a trading capital of just $100, right? So I want to take series of trades. So first you need to have your capital allocated, right? So now once you have your capital allocated, you can now decide how much you are willing to spend per trade. Now if you decide, okay, per trade I want to spend the $100, that means you can only take one trade with this your capital. Now if you decide that you want to take about 2 or 3 trades, or let's say let's make it a definite number, I want to take 4 trade with this $100, that means you split it into 4. So per trade you are spending just $25. So that means your entry or your capital allocation for each trade will cost you $25. Now you have not factored in the amount you want to risk per that $25. That's on a different level, right? So first, when it comes to Bybit, I know this. So by now you should know how to use an exchange, right? You should know how to use an exchange. We're not going to be talking about how to use an exchange. We're just going to be diving into the futures aspects. So now for Bybit, when you want to access the futures, you come to trade section, right? So before you trade section, you come to your assets. So ensure that it's in your unified trading account, right? And it's under USDT. For your unified trading account, under USDT. So you can see this is my balance $100, right, under my unified trading account. So I'll come back to trade, right? So now let's say for example I want to trade bonk, right? So this is the bonk token, or you can just come and click on it and search for the token bonk, right? You search for a token bonk. So we have bonk perpetual, right? Perpetual is also the same as futures trade, as leverage trading with borrowed capital, right? So we have bonk USDT, you have bonk USDC. So depending on the stablecoin you're holding, you can trade any of these two. Right, so I'm clicking on bonk USDT because I have USDT on my balance. So before we go into that, this is the chart section. You can read the chart if you know how to read chart yourself. Alright, so there's a trade I was supposed to take on bonk this morning. I didn't take it because of this video I want to record. So I want to make a live demonstration, right? And also want to use that capital to do a live demonstration. That's why I didn't take the trade earlier on, right? So I'll be taking the trade in this video. So I'll be showing you things to watch out for before you take a trade. So when a signal is given to you, you know what to do, right? So sometimes the signal might come in early and you seeing the signal might be late. So there are things you should take note of before going into that trade. right? So now let's so this is the interface, right? So longing means this place where you see long, it means you want to buy the token. It means you believe that the token is at this point, you believe the token is at this point, and to come up here, to come up to this particular section. Okay, so you believe the token, the price is here, right? And you believe the price is going to come up to somewhere or even above this price level. That's why you're longing it. But for shorts, it means the price is at this top, is at somewhere here. At this top, you believe it's going to come down. You believe it's going to come down. That's shorts, right? So we have long, we have short. So short, long means you are buying, while short means you are selling. So when you see a signal tells you long bunk, it means you are buying, you are longing, you are buying that token. So that's when the price goes up, you are going to sell. So when you see a price, when you see a token, a signal tells you to short, means the price at the top, means it's going to come down. So while it's coming down, you're making profit on your shorts. But for long, while it's going up, the price is increasing, you're making profits on your long, right? So now let's click on this other icon here beside the chart icon at the top, and look at this top corner, right? So you see this icon here. So this is where you can take your this is where you set up your entry and exit, right? So on this right hand angle, this is where you see if you can see this cursor moving your screen, this is where you set in your order, right? The amount you want to trade with, your capital allocation, and all your leverage and all. So why this other side is called order book, right? Just to show you the amount of people that are buying and selling at a particular point in time. We call them bid and ask. Right, so now first thing first, we have the isolated. So I've explained this top part. This is where you select the token you want to trade, right? You can search or you can just select from the list. So for this tutorial, we're using Bonk just like we know. So now this is the charts. It's also a mini chart for you to also view before trading. So now we have the isolated. Now this is what we call margin. So when you are trading on futures, we have two types of margin. We have the isolated margin, we have the cross margin, right? So but for our tutorial, we'll be focusing majorly on isolated. But if you are a pro already, you can decide what margin to use. But if you are just a newbie learning how to trade, please stick with isolated. But for people that are already familiar with how cross and isolated margin work, you can decide the margin to go for, right? So that right here on this other hand, we have the leverage amounts. You have from 1x, we have to 50x, right? You can also customize it to input the amount of leverage you want. So the maximum amount of leverage for Bonk on Bybit is 50x. On other exchanges, it can be higher, right? So you are not restricted to using only Bybit, but for just the sake of simplicity and ease of use, we are recommending Bybit. But you have the discretion to choose whatever exchange you want to trade on with. Do you get? That's for those that are expert, like I've said. But if you are a newbie, stick with Bybit, right? So when you master the act of trading futures, then you can now migrate to other exchanges as you see fit. So now this is leverage. So you can use the maximum leverage of 50x. So I'm going to explain what this leverage means, right? I'm going to explain. So let me go back to this margin. So now cross and isolated, they are two different words. Isolated means something that is secluded or kept in a closed space, while cross means it's open to everybody. So what this margin means the amount of capital you have. Remember I said we're having a trading capital of $100, so that's our margin. So $100 is our margin for this trade, for trading on this trading account. $100 is our margin for this trading account. So now if I'm using isolated margin on this $100, it means that any trade I'm taking would only work on the amount I've allocated. So remember I said something about splitting your capital, right? If you want to trade, depending on the amount of trade you wish to take. So if I'm taking 5 trade or 4 and I'm taking 5 trade on this $100, it means I'm trading $20 per trade. So if you divide 100 by 5, they give you 20, right? So it means I'm taking 20 per trade. $20 per trade. So if I'm using an isolated margin now, on this $100 trading, $20 per trade, I'm entering any trade. I'm buying Bonk, I'm buying SU, I'm buying Sol. I'm only using $20 out of this $100 for each trade, right? So if I'm using an isolated margin, it means when I'm trading with an isolated margin, it's only that $20 that is going to be committed. So nothing higher than $20 will be included in my trade. It will only work on $20. So my profit and loss will be based on that $20. So if I make a loss, let's say for example the trade go against me and I get liquidated, the only amount that will leave that my account will be $20 because I'm using an isolated margin. I hope you get that now. So if I'm using a cross margin, now it means I'm using the whole $100 to trade, but the trade I got into, I went in with, I only specified I want to use $20 for that trade. But on the other end or at the back end, it will allow me to incur more loss because I'm using a cross margin. It means the remaining $80 in this my account can also be used to service that my $20 trade. So cross margin is used by people that know how to manage leverage, right? You get. So if you're a newbie, that's why I'm recommending isolated, right? So for this tutorial, for our classes, we'll be focused on isolated. But if you're an expert already, please feel free to do whatever you feel like doing, right? But for our recommendations, sticking to isolated so that you can minimize your loss. So when it comes to loss, that's where the cross or isolated margin comes to play. If you are making profits, the remaining $80 does not service that trade. So it's only going to service the trade when you are losing. So you can see there's no point using cross in the first place if it's not going to add to my position when I'm making profits. So I use it to service my loss. It's not a wise idea, but the essence put it there so that you can choose to, because they want to make money from you. They always want to make money. So moving back to our trading interface, right? So this is a trading interface like we know it. Sorry, this video is going to be a very lengthy video, so please pay attention. So we have the isolated, right? And I'm trying to make it as fast as possible. So I've explained the isolated and cross, right? So I said we'll be using isolated margin all through. So now coming to this leverage aspect now. So we have the 1x, 2x, 3x, 5x, and guys, let's come to customize. So now on my $100 trade, on my $100 account now, if I'm using a 1x, it means I'm using just $100. So if I'm using 2x, it means I'm using $200 to trade. If I'm using 3x, it means I'm using $300. If I'm using 5x, it means I'm using what? $500 to trade. So I've borrowed $500 on my $100. After I borrowed $400 additionally to my $100. So 5 times 1 give you 500, right? That means 5 times 100 will give you 500. So whatever leverage you are using, you multiply with your capital to give you in multiple folds. It's not like you won't have access to withdraw that money. No, everything is done on the back end, but on the account they know, okay, you are trading with this social amount and this is your leverage you are using. So that if you increase this, so the more the leverage, the more the amount you have access to. Now it now comes, you now need to understand that the more the leverage, the higher your loss, the higher your profits. So if you are using a higher leverage, you get to incur more loss, and you also get to incur more profits, and it happens very very fast because you are now closer, right, to burning out on your phone or making more profits. So the same way you make more profits using a high leverage, you also make more loss using a high leverage. So it goes both ways, not one benefits the other. It works both ways. So if you're using a lower leverage, same thing that's applicable. Your loss is lower, your profit is also lower. So just use a recommended leverage. So don't go beyond 10 to 20 leverage. If you're now an expert, you can go 50, 100, right? But if you're starting out, stick from 5, 10, 15, 20. Just stick around that region, or just recommendedly just stick around 10. That's okay for you, right? So you can have and if you're trading with a low capital, you also want to stick to a lower leverage. Don't say you want to grow your money fast by using an higher leverage. You just burn out yourself very quickly. All right, so I've explained leverage, right? So we have markets and we have limit order. Now this is order. We have market order and we have limit order. So market order will come in place when we say, okay, this trade enter at current market price. Now the current market price of this bond token is 0.0296. It changes, right? So but let's say 0.0296. Now if a signal is provided to you and tells you to enter market order, you don't need to set anything. Just come to this place and click on markets, then type in the amount you want to use in buying that particular token. Then decide whether you want to long or short that market order, right, you are good to go. So but if the signal is given that okay, buy at this particular price, let's say, let's come to this tweets here we made on crypto for signal. So let's say for example a trade was given to you on Bonk. Now this is the write up and this is the article, right? So you click on it to read the article. So now this article give you a little background on the token and the trade thesis. So now this is the entry level now for this trade. This is the optimal level according to our analysts, right? This is the optimal level. Now this is our optimal level for taking profit. So we have 3 levels for taking profit. So once the price gets to any of these points, you can begin to take your profit. You can decide to take profit at take everything out at this price or this price or this price, and you can decide to take it in batches. Maybe take maybe 50% or 20% here, and here you can decide to take 30% here, you can decide to take another 20% or everything. So it depends on your risk appetite, right, how much you are willing to accept, right? So it's mostly advisable you wait till the second profit, or you want to see first take profit, you can take away 50%, then maybe take 25% here, then the remaining 25% you close it at this level, right? So now while we have this invalidation point, which is your stop loss. So in two things, so there are 3 things to note when taking a signal. First is your entry, which is the first one you see here. The second one is your take profit level, while the third one is your stop loss. That means the price you are willing to allow this trade get to if it's not going to go your way. Now it now determines how much you are going to lose on that account when you leave it to this particular stop loss, and that's where your leverage comes to play. So you can see that all of these things, they are connected, right? So now let's go back to this trade. Let's go and set in our entry, right? So now the entry for this trade is at 0 points. Now you can see that here the 0 is much, right? But on Bybit they've reduced the 0 because the perpetual contract, right? So they don't want the 0 to be too much, but it's the same price level. So if you notice, you are seeing 1000 bonk, right? So they've represented these zeros, these multiple zeros in front with this 1000 in front of this bonk. So there's no token like 1000 bonk, but for representation of the bonk token itself, that's why we have 1000 bonk as a futures contract. So this is a futures contract. You are not holding the token itself, you're holding a contract. So take note. So now for limits, now this is where limit comes to place. You need to have an entry level. So remember our entry level here. Sorry. So remember our entry level is at 0.0282, right? So now for your limit order, that's what you're going to do. So first is the price of the token you are buying, right? Price, you can click here to have it, or you click on this to change it yourself, or you can also input the figure yourself, but ensure you're inputting it correctly, right? So to be safe, just click here and then tweak the figure here. So 2822, right? So that's our entry level. Now remember our trading capital here is $100, right? So now we're going to determine how much you want to trade with from this $100. So now for this $100, we want to take just 4 trades. We want to use this $100 to take 4. That means for each trade you'll be using $25, right? So if I input $25 here, now you'll notice at the bottom here, sorry, if I input $25, notice at the bottom here the cost is showing me 0.4. That means I'm paying $0.4 to take this trade. Now remember, this trade is a long trade, is a long. I'm buying it, so I'm expecting more profits when it goes higher than this, right? So it's a long trade, right? So you can see the cost here is showing me this, and I can calculate my liquidation price. You can see my liquidation price is also higher than what we have here. You can see this is 2736. Why here I'm seeing 27938. So you can see it's higher, right? So now mind you, this leverage is already at 50x. Means you are going to burn out very quickly if we take this trade with this leverage. Now also this cost is not tallying because, sorry, excuse me, I want to use $25 to take this trade, but here I'm seeing 0.4. It's also be showing me $25. So how do I calculate my leverage? So now let's go open our calculator. Okay, so this is our calculator. So on this calculator, you will see so you will say 25 times 50, right? That's 25 times 50 is your leverage because you are using 50x leverage, right? And you want to use $25 to trade, so you say 25 times 50 to give you $125. So that's what you input here. 125. Sorry, you say 100, $1,250, right? So you can see now it's showing me I'm using what, $26 to trade. So if I calculate my liquidation price, this LIQ dot price means liquidation. That means where the trade will stop you out if you are in this trade with this leverage. To the whole $25 will be in loss when you get to this price, but that's what liquidation price means. And this is the quantity, that's the amount of bond contract token I will get if I buy with this amount. Now mind you, I'm just using $25 for this trade because I'm using a 50x leverage. That's why I can buy with this amount. So but like I said, let's stick with a lower leverage. So let's come to 10x, right? So let's come to 10x. So now 10x, I cannot use the same amount for 10x, right? So let's go to our calculator. So let's go back to our calculator. So we'll say 25 times 10. So that's 250. So 250, right? So we change this figure to 250, 250. So you click on calculate. So you can see now that it was different from the first one, right? So you can see when we are using 10x leverage, so you can see our liquidation price is far below our is far below our stop loss. It means this $25, if we don't set stop loss, it has room to breathe, right? And when we set our stop loss, the loss will be incurring will be lower compared to when we use a 50x leverage. The same way for your profits. So now once you are done with these two, then you want to come under here, this is your TP. You click on TP. So you have business with this your isolated margin, your leverage, the limit order, the price, the amount you are using to trade, which is $25. But because they're using a 10x leverage, you are using 250. So 10 times 25 gives us 250. That's why I put in the order value as 250. Then the cost you can see here is $25. That means if you are buying, we'll be paying 25.09. But if you are selling, it means we are shorting, we'll be paying $25 for this trade. So these are liquidation prices. So the green aspect is showing you this is a buy order, the amount you pay for the buy. But if you are while you're already showing your short, just like the color code indicated on your screen, so don't get confused. So that's why I said Bybit is user friendly and beginner friendly, right? Anyone can easily use it. Now it gives you this breakdown even before you take the trade, so you have an idea of what you are going to expect at the end of the day. So if it's a very favorable trade, then you can continue. So this red part signifies when you are selling, it shows you the breakdown for selling, and the green shows you the breakdown for buying. So now click on this TPXL here. So TP means take profits, SL means sell stop loss. So now so the take profit, remember in our article we said you should take profits. You can take profits at 3 or on 3.1 or 3.250, right? So now let's say we want to put our take profit at the first one, which is 0.03, right? So you can see estimated P&L as profit or loss is $15. So means if I enter this trade at this price and I sell at this 0.03, I'm making $15. So for my stop loss, you remember your stop loss is just one stop loss. So you can see this 2736 for your stop loss. So you put in 0.2736. So you can see for my stop loss, I'll be incurring just $7 for this trade. That's minus 30% ROI. I'll be incurring just $7, but I'll be making a profit of $15, right? So I'll make a profit of 15, and that is 63 percent on my capital, which is $25. So now this is where risk to reward comes to play, right? So don't risk more than you can lose, so that when you lose, your wins will cover for your losses, right? Your wins cover for your losses. So now the way futures trading work now, you don't make returns on your margin. you make returns on your sorry, not your margin directly, right? So you make returns on your committed loss, your acceptable loss. Now if you are willing to risk $25 for this trade, right, you would need to increase your leverage so that you can make more profit when you're incurring $25 loss. But for this trade, you're only willing to risk $7, so that's more like the amount you are trading with. Do you get? That's more like the amount you are trading with. So you are not trading with $25 per se. Just that $25 is the margin that will allow you to earn this $15 reward or incur this $7 loss out of the $25. Are you getting it? So it's kind of a little bit tricky, but when you do it consistently and with time, you get to understand it better. So that means our our capital per this trade that are willing to risk per this trade is $7.5, right? And we are making $15 in return. That's 1:2. Means we are risking one to win two. So if you lose two trades, one trade will cover for those losses, and you are back to break even, right? So the essence of we trading this way is to ensure that our loss is very, very low and our winners are more. So when we incur more winning trade, it covers for our loss and we are now profitable. That's the essence of trading, right? And trading with a system and particular rules, set of rules. So now if I want to incur more than $7, let's say for this whole $25 I'm using to trade, I want to use this whole $25 to trade, right, to commit it to my loss. So you will notice the profit will also be higher. So now let's come to 10x right here. So let's increase it to about let's increase to 50x. Let's see 15x. So let's go back to our calculator. Let's say 25 times 15. So I'm using 375. So let's go and use 375. $375. So let's calculate. So my stop loss is still far. So how much am I making? So you can see how much the amount I'm making is $23 for this first entry. We've not even looked at our second CP and third CP. So let's see first and second CP, which is 3.1. We are making $36. Let's look at the third CP, which is 3.250. I'm making $56. You can see. So this, you are now using a 15x leverage. Now take note. So I'm back to the first take profit level. So now let's say our stop loss. You can see my stop loss now. I'm only incurring $11. So that means for this $11 loss trade, I'm willing to, or $11 I'm willing to risk on this trade. I'm making how much? I'm making $23. That's also another 1:2. But if I increase my take profit to 3.1, it's also more than ratio 1.2. Is it okay? That's 1:3. That means I'm making 3 times my loss. Then if I take it to the third TP level, I'm making 5 times my loss, right? So we divide this by this 55. So I'm making 5 times my loss if I allow this $11 to be incurred, to be committed to this trade. So I'm making 5 times my loss if this trade goes my way. So that is about 227 percent, right, on my capital. So this loss remains, this stop loss stays static, but your take profit can change based on the levels you have gained. I'm also going to show you a way in which you can split your take profits. There's also a way to do that, to impute all this. If some of you might just want to place your trade and just leave it off, right? So when it triggers any point, either take profit or stop loss, you are in either loss or you are in the winning aspects, right? Because it might be difficult to monitor the trade you get. So so now let's increase the leverage, because I want to use this the whole $25 for this trade. So let's go for 20x leverage. Let's go for 20x. So let me save this so you can even see the warning sign. So 20x leverage will be, so 25 times 20, that should be 500 if I'm not mistaken. 20, yeah, that's 500, right? So increase this to 500. The other value will be 500. Remember, we are still sticking to our entry price, which is at 0.02822, right? So you are still sticking to that. So you can see my cost does not change. It's still, even for the fact I'm changing the leverage, it's still at $25, right? So calculate, might just have some little extra in front of it. So you can see my liquidation price now is now at what's it called, now at 0.27, right? It's still far, a little bit far from our invalidation price, right? So now, well, let's see. So let's go back to the normal take profits, the first take profit, which is at 0.03. So I'm making that $1 on this trade. If I'm using, how much are we going to be losing? Okay, we're going to be losing $15. So you can see, so $15 is the actual capital I'm willing to lose on this trade. So if I'm losing $15, I'm making $31 in return. So if I increase this, this is 49, right? And that's 3x. If I increase this to 25, that's 5x, as the case may be, right? So now I've still not committed this whole $25. This whole $25. I'm still using $15. So I'm just showing how the leverage works. I'm just trying to demonstrate to you. So now let's customize this to 25x leverage. You can always input the amount you want here. You can always type it yourself. Then click on save. So you can see the warning, high leverage increases liquidation, please adjust the leverage. So click on save. So now when you multiply 25 times 25, that should be around 750. Oh, sorry, 625. That's 625, right? So come to 625. Say 625. Then we'll calculate. So you can see it's now close, very close to, or a little bit above our invalidation price, right? Remember, these are invalidation price here. These are invalidation price, and that's, you can see the liquidation price a little bit above it. So you can always tweak this to suit you. So now for the loss, expected loss, we're expecting a $19 loss, right? Yeah, it's $19 loss, because our liquidation price, you have not reached. If you reach our liquidation price, that's when we incur due $25 loss. But since it's at this price point, right, it's still a little bit far from our liquidation price, so we're incurring just $19. So how much are we making in return? So you're making $39. That's also a 1:2. So this is how leverage works, right? This is how it works, right? So your loss will determine the amount you are risking per trade, not the value. The value just helps you, it gives you more edge in making profits, right? Making profits. So this your stop loss will help you reduce the amount of loss you will take from that your allocated capital, right? So there's portfolio, there's capital, and there's the amount you are willing to risk. That's the capital you're willing to risk on that trade. So that's the acceptable loss. So for this trade, the acceptable loss is $19, right? Even as much as you're using a $25 trading amounts, other value to finance this trade, right? So you can see our profits is way above what we are risking. So don't look at this $25 as the amount you are going in with this trade. Just look at it as your buffer, what allows you to make profits in the whole markets, right? So your expected loss is the amount you're actually sacrificing, the sacrificial lamb, the amount you are sacrificing to make this amount of profits, right? So now let's increase this, let's say to 700. Let's increase this to 700. Okay, let me say, let's take this to 30x leverage. Still want to have the $25 committed. So let's increase. So 30 times 25, that would be what? So that's 750. So let's go back to Bybit and input 750. So you're still using $25. Calculate your liquidation. Click on calculate. So you can see. So let's come to our stop loss. Our stop loss is still, we are still within that region. So let's stop at 22. So let's we are risking 22, and how much are we making? I'm making $74. So that's how it works, right? So for this trade, let me stick to. Okay, so now, yeah. So I said why I took this trade intentionally. So now, because this trade I didn't get in at the price I was supposed to get, right? Because I've not posted the article, and also I wanted to make a tutorial video on how to do this thing. Now, the optimal entry was at 2822. So imagine I've taken this trade since the signal came in. I will be in profit by now, right? But I didn't take it because I want to make a video for you guys, right? So now this trade has already gone away from my initial price, but I still want to get into this trade. Why? Because take profit one has not gotten to take profit one yet, right? So there's still opportunity for me to take this trade, right? And also you need to also play safe in this kind of area, because now you'll be incurring more loss because you didn't enter at the optimal price. So also bear that in mind. Or you can just sit it out and just wait for it to come back to your entry. So if it comes back to your entry, fine, you are in the trade. That means you'll have set your order, you'll have placed those parameters already, you'll have set them already. So if it comes back to your order, that's fine. You would be you'll be okay. Then when the trade triggers, it either goes your way, gives you your profits, or it goes against you and you incur your loss. Just plug and play. Very simple. But I want to participate in this trade. So what do I do? So what I do is I will enter at current market price, right? Now, me entry at current market price. Now, I won't be using my old $25 again to enter into this trade. Now, I'll be reducing my exposure. Normally, I was also going with $25, but because I didn't get in on time. What I'll do is now reduce my exposure from $25 to, let's say, $10, right? And reserve $15 for when it hits my particular price. And sometimes it might give you two entry points, right? It might give you two entry points, so you can also use the same strategy there. So the first one, you go in with little, then the second one you hit it hard, right? You hit it hard. So if you're going with little, you know you're not expecting too much, but when the full amount commits, then you know, okay. But you still have your stop loss to protect you from incurring losses, right? Or you can sacrifice your trading amount you've allocated for that particular trade. So if it's $25 you've allocated, fine, you can go. For those people that will be using $20 to trade, you can stick with $5 per trade or $10 per trade, or you can use the old $20. But you know, once the old $20 gets blown, you need to look for another money to finance a trade, right? So if you want to play safe, use $5, $10. So $5 will allow you to take 4 trades, while $10 will allow you to take 2 trades, right? And you can also do that using your stop loss, right, to mitigate your loss and win. So now to enter this trade, like I've said, right? So how will I do that? So I'm going to reduce this to 10 to $10. So I'll say 10 times 30, that's 300, right? So the cost for this trade is $10, right? So now let's calculate this. So yeah, so it's far from my liquidation price, yeah, but the cost I'll be incurring is $9. My take profit will be $18, but now I'm entering at market price, so I'll just come to here and say markets, right? So I'll now put the 300. Now remember, I'm using a 30x leverage, right, on this $10. I'm using a 30x leverage on this $10. So let's calculate it again. Calculate. So my liquidation price is at 29. So you can see it has changed from the initial um, stop loss, right? It has changed from the initial stop loss, right? So if I'm incurring this, so let's put our top of take profit at 0.3. I'm making just $2 on this trade. Then my stop loss 0.02 736. I'm incurring more, but it will liquidate me at this price point. So what I want to do is I want to reduce this leverage to, let's say, 15. So reducing it to 15. So 10 times 15, that's 150, right? So let's calculate again. So you can see it has reduced to 2.8. So let's reduce this again to 10. So let's calculate. So 10 times 10 will be 100, right? So let's calculate this again. So 270 liquidation price. So you can see here, I'm making this. You can see here, so you can see So I'm incurring more loss here taking this trade. So the best thing for you to do is you sit it out, right? But if you still want to go, if you want to risk it, just know that you won't be making much. So now why? So because if I'm entering this trade at this point, now I can't take profit again. I take profit one because the profit margin is very low compared to the amount I'm risking to win this trade, right? So if I say 3.1, so you can see 3-1, that's $4 while I'm losing $7. It makes no sense to take this kind of trade. But if I come here to 250, 250, yeah, if I come here to 250, so I'm making $9 while I'm losing $7. So if that's okay by you, fine. But if it's, but this is not, this is more like 1:1, a little bit above 1:1. Let's say 1:1.1. It's more like I'm just playing in the street, right? So it's always best you enter at the optimal price entry, because now our stop loss is now far. So for me to enjoy this trade, I will need to increase my stop loss to like 2.8. So if I increase to 2.8, now you can see I'm only risking $5 to earn $9. So if you didn't enter the actual price, that means you need to increase, you need to adjust your stop loss a little bit higher than where it was before. 27, looking on the chart, 278 will be around, 27 will be around somewhere here, right? Right, 28 will be around here. So you can see our stop loss is around somewhere here, then increasing it will bring it here. So you can see that when it's coming down to hit your stop loss, you won't incur more loss compared to when it's in this region. So that's what happens when you adjust stop loss. So if you give a stop loss at this region and you didn't enter at the correct price, you need to increase your adjust the stop loss a little bit above the initial price, so that you don't incur more loss, because now the price is now far from where it was before when we gave the signal. So I just needed to point that out for people that would miss trade and want to get into a trade. So the best thing for you to do is to sit it out and wait for another trade, or set your order just in case the trade comes back in your way. But we'll always update you on the group, on the trading group, the private group, on what to do and what not to do, right? So this is how I can take this trade, right? By committing this this amount, right? So let's take it to take profit one. So you can see it's still low compared to the amount I'm risking. So let's say I'm increasing this to 2.9. So right, so I'm taking this to 3.1. So I might want to increase this leverage too. Let me increase it back to 15. Let me increase it to 15. Let's say that's 150, right? That's $10. So we have $6. And let me see this, $1. Having $6 here. We're incurring $3, but I want to incur a $10 loss for this trade. So let's adjust this leverage to 50x and see. So 50 times 10, that's 500, right? You can calculate this. So my stop loss, let's say, is at $11. So let me adjust this to let's go to 30x. Let's go to 35x. So 35 times 10 give us 350. So I'm doing this live demonstration so that you guys understand how it looks like when trading. So now let's come to our stop loss. So our stop loss is around 7. Sorry for that. So let me adjust this to 40 instead. I want to incur a $10 loss for this trade. So let's adjust this to 40. Please stop calling me, I'm busy. So now that will be, we'll be using 400. Be using 400, right? So so the stop loss is at $8. Right, so let's increase it to 45. I just want it to be at $10, so I know I'm risking $10 per this for this trade. So 45. Okay, so it will be 450. So always make sure that when you adjust your leverage, you also adjust your order value based on the amount you are committing to this trade. Don't forget that. So okay, so we are close to $10 now. We are close to $10 for this. So when it comes to 0.29, I would hit my stop loss. But if it doesn't go my way, if it goes my way, I'll make profit. So at so it won't be wise to use the first take profit again because my loss is now way higher. So I should be aiming for the second take profit, which will give me $20 for this trade. And if I want to be more greedy, I can say, okay, let me say that the third take profit level, which is 250, right, which will give me $43, right? So which way should we stick to 0 point? Should we stick to 32? So you can always take your take profit within the region we've given you, right? So but we give you that point because that's the liquidity level we believe price will get to if at all it's going to reverse, right? So let me make it just a 1:3 trade. So I'm risking $10, so I'm risking $9, approximately $10 to make $35 from this. So that's 1:3. So I'm going to click on long, right? I'm going to click on long. So you can see using leverage, shouldn't be afraid of using leverage. So you can see the breakdown here. I'm getting this quantity, other quantity of 15,000, 15k bunk, and my cost is 10 points. This the value, that's the leverage amount, the borrowed capital now is $400. So that's what leverage really helps you do. Now the position leverage is isolated, and the estimated liquidation price is 0.292. Now time of falls, order cancel, trigger, blah blah blah. Now trigger, price level, stop loss, and the like, and order price. So market, I'm using the market leverage, a market order, sorry. Yeah, so looking at this, it means this trade won't take me out even before it gets to my price point. I mean, my whole $10 will go for vanishing even before it gets to this 2.9, but I'm willing to take that loss, right? Because the profit I'm aiming is far greater than my loss. So let's confirm, shall we? So let's confirm. So remember, it's a long trade, order timeout. So let's take it again because I wasted too much time. So let's confirm. So you can see my order has been submitted, so and it's in already. So it's in. So remember I said you can set your stop loss along the line. So I'm already in profits, right? I'm already in profits. So it can also be negative depending on the market direction. So you can always see in your chart showing you when you bought and when you're exiting, right? So now I can just leave this trade and just allow it to do its thing. When it gets to my take profits, I'm out. When it gets my stop loss, I'm also out. So you get. So now if you come here, now this is where this gets juicy, right? You can set your profits. Now this is the top profit for the entire position and stop loss for the entire position. So you can see I'll be carrying this loss minus 86%, but if it goes my way, I'll be making 370%. So partials is where you come to adjust your take profit. So before you adjust this partial, you can edit this your entire profits, right? So if you want to take, let's want to set 3 take profits, right? So let's take this off so it doesn't affect our partial. So I'm going to take this off. So you come to partial. So at what point now, for example, you took the trade at the exact price point we gave you, you took the trade at that exact point. So how do you set your take profit for those 3 levels you have highlighted on your on the analysis, right? So you can now put in the quantity you want to take and the amount. So now let's say if at the first instance I want to take 50% when it gets to take profit 1, so that's 0.3, right? 0.03. So now you can see this is the amount that would get triggered, right, at this price point. This is the amount that will get triggered at this price point. So this is the limit order, right? This is the amount that will get triggered at this price point. So so you click on confirm. So now you cannot add more. So I've added the first take profits. So remember, I now have 50% left to be allocated, right? So say okay, the remaining 50%. So now it's not taking 25% for my 50. Sorry, you should know that you've taken 50% out of 15,000 in quantity, right? So you have used 7,600. So this comes is tricky. So you need to know how to calculate here. So now we want to take half of it again, out of half of this 7. If you click on this, you see it will give you the whole amount, but no, it has, remember, we've committed about 7. The quantity we've committed here is 7,600 already, so you don't want it to affect the calculation. So now you're not left with 7,600. Remember, the whole quantity is 15,200, and we've taken 7,000. We've set that as our first take profits. Now for the second take profits, we want to go with 25%, which is half of that 7,600. So half of it, so you put your price at 0.031. So this will be $5. Remember, the first one was around 3 point something dollar, so this is 3 point something dollar. So the total of these two now is around $9. You are taking off from this trade now at this price point. So you can now click on confirm. Do you see it now? You can see the first take profit, second take profit. So you can add your third one again, then come to quantity. Now the remaining quantity will be 3,600. So now you are dealing with quantity here, so just take note, you are dealing with quantity. So 3,600. All right, so you click on you type in the price you want to sell it at, 0.03250. so this will be 10. So the whole trade now would, when you exit this, it will give you $19, right? It will give you 19, or let's say $20, right? So it means you're going to be making 2x 2x from this trade. That's 1:2 from this trade, instead of our initial $35 if you have leave it at this 3.2. So you can see the when you take partials, it also reduces your chance of making more profits, and also reduces your chance of loss, because you've closed a particular portion of that trade. Now when, okay, let me put this and explain further. 3250, yeah. So click on save. So now what happens now when we click, when the trade execute on this first take profit, which is 0.3, means you have reduced your exposure from 100% to 50%. So remember, we are risking $10 for this trade. So now when you close 50% in profit, means you're now left with $5 running in that profit. So now the profit will now be based on that $5, not longer on your $10 that you are risking initially. Do you get? So it will now be based on that $5 that is left. So that's why you see that the profit is reduced as well. So but if you leave it, it will give you that much profit, or it can also return and you don't even make anything in the long run because you didn't take profit. So it's not left for you to decide which one you want, what you want to do for yourself. So that's why trading can be very tricky, but when you understand all of these things, it gets better and clearer for you. I hope I've been able to do justice to every doubt or questions you would have along the line. So if you have any question, please feel free to reach out to us on the group chat. Drop your questions, I'll be ready to answer them as we proceed, right? So let me cancel all of this and go back to my initial take profits. My initial take profit is 0.0, sorry, trigger price 0.032. yeah, so let's make $36 off of this trade instead of that unnamed. What is happening? So let me set, okay, it's back. Okay, we are back at it. All right, so it's on. Okay, I didn't save it. Okay, I didn't save it, that's why. So you can see now I'm already in loss now, right? You can see it's going against me already, so I'm already in loss. So let me reduce the time frame so you can see I'm already in loss. But that's what we signed up for, right? Either you make loss or you make profits. Okay, so now that I've missed the first entry and I've taken this second entry, so I will now want to go and set my trade now. So my remaining $15, I want to use it on this trade. So let me say, so if it comes back to my initial price at this price point, so I'm using a 45x leverage for $15. So let's go and multiply 45 times 15. Let's see what it will look like. So 15 times 45, so I'm using 675, right? So we say 675. So let's calculate. Oh, Okay, still far. Let's reduce this to, it's far from my liquidation price. Let's reduce this to let's see, 35 or 30. Okay, let's use the 30. Let's use 30. Save. So let's go back to our calculator. So I'm using this calculator for people that would find it difficult to get the actual figure. So that's 450. 450. So let's say 450. So calculate. We still far. And let me see. Stop loss 0.02736. Liquidation price is far from our take profits. So our stop loss, let's reduce this to 20 instead. So I want it to be below my take profit, my liquidation price. I want it to be below. So that's 300. So we'll go to 300. Okay, still above. So let's just stick with 10x. Let's see. So 10x times 150. Okay, so now you can see it's below my liquidation price. So let's say 67. So I'm mixing, 736. I'm missing $5 for this trade. So let me increase this to 15. So 15 times 15, that's 300. Sorry, no, that's not 300. That's 225. Yeah, 225. 225. Let me see, I'm sure my risk in. So sometimes this calculate can give you wrong figures sometimes, so you just need to be careful. Okay, so I'm mixing $6 for this trade. So let's increase this to 20. So you can see now it's kind of correlating now. Sorry I'm taking your time for this, but you guys just need to understand how these things work before you engage into trading, right? So you don't burn or lose your capital. Okay, so now let's move on to stop loss. Okay, no, we need to adjust this. So 20 times 15, that should be 300 if I'm not mistaken. Sorry, 450. My math is bad these days. 450. Okay, so let's see. So stop loss. This maybe this is misbehaving. Let's refresh the page. Okay, 2763. Oh, sorry. 15 times 20. Sorry, I was using the wrong leverage. 15 times 20. Yeah, 300. Sorry, it supposed to be 300. I went to use 450. I was having a wrong calculation earlier. Sorry for that, guys. So you just need to be very careful. It's even good as I'm showing you guys all of these things so that you know how to protect yourself. 36, not 63. This edition price is still far less long. What is wrong with this Bybit interface? Let's just stick to 15. 225, right? So let's say our first take profit 0.3. We're making $14 for this $6.7 loss. Let's say 0.1. We make it $21. So this is a good way to go. So let's long. So this order now would would wait till the price comes back to this region before it executes. So you come here, you see it in order. So this is it in order, right? So it's still waiting. It's not in position because the price has not gotten to the trigger point yet. Until it gets to this trigger point of order price of 0.02882 before it changed to position. So when you see anything on that order, it means the trade has not yet happened, right? So remember, we've set our take profit and our stop loss. So come here, so you can see it has been adjusted. Okay, now this is our trade already. So this is our trade. So this take profits and our stop loss. Sorry, this is the order for this trade. So you can see two order. So this is the take profit and stop loss for this trade. So it's also being ordered because it's waiting to be executed. So why this is the order for this trade? It will just opened now. So the stop take profit is this, while the stop loss is this, and this is our order price, and this is the quantity that is yet to be filled. All right, so that settles it for this video. I hope I've been able to do justice to every question you have left. Yeah. Okay. So why is this showing me $50 here? So be okay. Cancel this and see. So guys, just stick to our just since we've told you use an isolated margin $15. All right, so any questions, please drop them in the group chat.